Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
Dell shares rising as much as 6% earlier in the session. They've come back a bit, 3.3% to the upside right now. The company roughly doubling its growth estimates for sales and profit for the next 2 years. It said demand for AI products will extend those higher projections at least through the 2030 fiscal year. We've got a special treat in the Bloomberg Interactive Brokers studio. Woo Jin Ho, he's Bloomberg Intelligence Senior Hardware and Networking Analyst. I was going to say,
he's usually in a box. He still is in a box, but he's at least in our box in our studio.
Yeah, it's really good to have him here in the studio, usually out in Princeton, New Jersey, where Bloomberg Intelligence headquarters is. Okay, I'm putting Carol on the spot here.
I know where you're going to go.
Carol's not convinced Dell is an AI company. Should we think of Dell as an AI company?
No.
All right. Boom, Carol.
I'm in good company. All right, so lay it out for us.
So look, they're involved in AI servers. At the end of the day, they are a box maker that takes NVIDIA chips and assembles everything together in a box.
This is the whole on-premise thing, right? This can help to build out from that. Yeah.
Neo clouds,
right?
Like the CoreWeaves and the N-Scales and the Nebuses in the world, right? We got those companies, and then also the sovereign AI companies. And just to break down their guidance, right? They guided to 7 to 9%, up from 3 to 4% the last Analyst Day. What's really driving that is 20 to 25% growth in AI servers, right? Now, this is phenomenal growth considering how much it's grown over the past couple of years.
Yeah. Right.
And what it tells me is, like, I know there's a lot of bubble concerns on AI servers. It shows the durability of AI server revenue. To put it in context, their revenue guidance, the AI server guidance implies from $20 billion in fiscal 2026 to about $45 billion in 2030.
That's amazing.
These are phenomenal numbers.
That's off the chart. Right. But why is that not a sign of bubble?
Well, there's
a bubble.
There was a couple of things. I'm actually here from the Analyst Day, which is why I'm in New York.
Right.
And what they're telling me is that, look, they're very early on that S curve, so the demand cycle is still fairly early, right? They're not really involved in the hyperscale cloud guys, but they are seeing new data centers cropping up every day, every week, every month, and they have good visibility into sales, at least for the next couple of years, on what the order flow is, right? Now, think of Michael Dell, right? He's involved in every AI deal that's possibly out there, right? So he's going to be exposed to every type of AI server deal globally, ex-China, of course, right? So
what do you mean he's involved in every AI deal?
Like his equipment.
You're saying his equipment?
Well, he's probably one of the best sales people that's out there from an IT hardware standpoint, right? Let's look at some of the involvement that he's been in recently. If we think about the TikTok deal that was announced, right? He's involved there. He has global footprint in terms of what type of deals there are. He's probably involved in some of that OpenAI sales as well, right? So he's got some breadth and good exposure into what deals are coming in. So he is going to the company itself is going to be involved in all of those deals.
Biggest competitor, Lenovo, HP. Who is it?
We bring it up all the time. Its biggest competitor right now is Supermicro.
How? God, remember we've kind of stopped talking about them.
Yeah. How is Supermicro the biggest competitor?
Well, if we look at Supermicro right now from an OEM standpoint, they're on pace to about $33 billion in total revenue. I would say about 70% of those sales are going to be AI server related, and that's going to be comparable to Dell, right? And they're going to go neck and neck. Now, the one group of company are the white box vendors. Think about the Foxcons of the world, the Quantas of the world, and they kind of dispel them as a competitive threat to some degree. because they can make custom servers, number one, and also help with the time to market, right? These neoclouds as well as the sovereigns, they actually want their AI servers now, right? And the sooner the better. And if they can get the GPU supply, which is part of the components in delivery, they'll be able to win those deals.
What?
I'm waiting for you to be convinced that it's an AI company, though. Woojin says you're right. It's not an AI company.
Not yet.
Well,
I mean, does it, or, well,
it's a box maker.
it's a box maker.
Right.
Okay.
But it's at the intersection of all this technology.
That is correct.
It's a
Right.
box provider for these companies
To help support
for every deal.
Well, so when I think about their deal activity in general, right? I'm from a profitability standpoint, AI servers only generate about 5%
For Dell?
operation.
Huh.
Yeah, Dell, and almost industry wide, right? So from a profits standpoint, it's almost comparable to a PC selling a PC, right? So what's really driving profitability is gross profit dollars and operating profit dollars to really drive up that EPS growth. I would call it an AI company. If we think about the gross margin profiles of someone like an NVIDIA or a Broadcom, right, the chip makers, they're actually selling the picks and shovels, right? Dell is only selling the cart.
Okay. Good to know. So is the move up in the share price justified, do you think?
Yeah. For a couple of things. AI server revenues are higher than expected. More importantly, the EPS growth of 15%, much higher than expected. So if they're able to execute on their margin profile, on their margin targets, as well as their cash flow targets, there are going to be a lot of satisfied investors.
Well, interesting to see. I mean, the company reports November 25th after market, so we have a little bit of time. Stock's up about 31% year to date.
We affirmed 3Q guidance, so that helps.
Right, exactly. Always helps when you're here. And to have you in studio, my God, what a gift.
No, pleasure's all mine.
No. Oh, good stuff.
Next time you're in the city, tell us, and you'll take us to dinner.
We'll do that.
How's that?
I'll bring some more tea.
Does that sound good?
I know you guys want the tea. So
We do. We always want the tea.
All right.
Love it.
Gonna leave it there. Woojin, thank you so much. Really appreciate it. Before you leave, since we just have you, I mean, we have been spending so much time this week looking at the AI spend, and I really feel like it's been over the last few weeks when we continue to see all these deals. Is it wise to be asking, is it a bubble? Or when you do your channel checks, does this all seem legit in terms of the spend? And earnings is going to show us whether the spend is paying off for some of the companies that are spending big time. But what's the smart, I don't know, you're talking to the executives in these worlds.
Yeah, so when I look at it right now, I think there's a disconnect in terms of the revenues generated from AI to the AI build out, right? I know that the recent news flow has been, look, the AI uptake hasn't been as strong as we had hoped. But if we recall back a couple of weeks ago, when OpenAI talked about the token generation, the tokens consumed for these AI models, and I believe they had like some ridiculous number of like $10 billion or $100 billion in revenue. I mean, we're starting to see consumer AI really starting to ramp up, right? So essentially, what they're doing is they're building before they really start seeing that revenue slot machine happen.
All right. Good to know. Like it gets to, like all the stuff we've been talking about this week. Woojin Ho, thank you again. So appreciate it. Senior hardware networking analyst at Bloomberg Intelligence, right here in our Interactive Broker studio.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
As Tim mentioned just before Charlie, McKinsey expects women to control $34 trillion, or roughly 38% of investable assets by 2030. That's close to double last year's total. We have definitely seen the figure grow over the last decade. Let's get to our weekly discussion on women, money, and power, where we explore the economic implications of these changes and how to navigate them. There's so much going on. Great to have back with us Erin Harkless-Moore. She's Vice President, Managing Director of Investments for Pivotal Ventures right here in studio. Welcome. It's so good to see you. How are you?
I'm doing great. Carol, Tim, thanks for having me on today.
Thank you. Well, this is a big issue. We've been talking about it for years, about the amount of money that's either shifting into the hands of women, what it means, what the differences are. I am curious, and maybe not everybody's aware of all the work that you guys are doing. You have this very specific mission at Pivotal. Remind everybody what you're up to. And I am curious about what it means on a day-to-day basis, what you're looking for to invest in, relationships, and so on.
Yes. Again, well, thank you for having me. Pivotal is an organization founded by Melinda French Gates in 2015. We are focused on advancing social progress. And specifically, when Melinda set up Pivotal, she realized that we would need multiple levers and tools to do that, including philanthropy and investment capital, to get more power in the hands of more people, particularly women. So we invest in women-led funds. We also invest in companies that are innovating in areas and themes like women's health and caregiving, where women carry a lot of burden. And there's great opportunity to drive innovation, and we think make a lot of money investing behind those themes as well. So that was the real impetus to found Pivotal for Melinda. She wanted women to be in a position to make decisions, control resources and capital, and influence the decisions that are happening in our workplaces, in our communities, in our schools, and in our homes. And that's what we're setting out to do with our investments every day.
So when you identify those investments, when you identify where you want that money to go, what are the things that actually advance power and influence for women in your view?
It's having women in positions to make decisions. So as we invest in funds that, again, are predominantly women-owned and led firms, they're investing across a spectrum of sectors, everything from AI, enterprise, digital health, financial technology, fintech, the care economy, which is one of my favorite topics. I'm happy to talk a lot more about that too. But that's what women's power is for us. It's women, again, in a position to make these decisions. And it's also true for our direct investing as well. Many of the companies that we backed have female leaders and some do not. But we're just trying to find founders and innovators that are really solving problems for everyday Americans and everyday women.
I love that. And we want to get into some of the specifics in terms of where you guys are investing. But this idea of getting money in the hands of women, how many times do we sit around this table and it doesn't matter what group we're talking about, money talks.
Yes.
It gives you a seat at the table, whatever table that may be. And it's just fascinating that here we are still in 2025 and it's still a struggle. But this idea that you guys are specifically targeting women and making sure that they are having the money they need to kind of grow their power, that's really important.
It is. It's incredibly important, Carol. And the numbers have improved. About a decade ago, about 9% of decision makers, partners at U.S. venture capital firms were women. That number's grown to about 18%. So we've made meaningful progress in the last 10 years, but we have a long way to go. And as you both shared in the opening, that $30+ trillion of assets that are held by baby boomers that are most of that transferring now to women. Women are going to want different things with their money. They want different advisors. They want products that meet their needs and solve some of the issues and problems that they're facing. And so we see, again, a huge opportunity if we can change the face of who is making the decisions. That brings real power and real change. Can
we talk about caregiving for a minute?
Yes.
It's an area of your focus. It's an area of focus at Pivotal Ventures. It's something that Carol and I think a lot about.
Been involved in it.
Yes.
How do you make this work structurally in an economy like ours?
We have to start with the care infrastructure. We've supported research at Pivotal Ventures that sizes the care economy at $648 billion. I'm going to pause and let that sink in. Every time
So that's for people's offspring, but also for people's parents and other loved ones they might be taking care of.
Exactly, Tim. It's the full spectrum. I describe it as end of life, back to beginning of life, child care, elder care. We think of women's health solutions to help you optimize your home life better, to care and age in place. All of that is a part of that $648 billion market. And we've ignored caregiving for too long. It's the most important work. As you said, we all do. Everyone's a caregiver at some point in their lives. And as we thought about sectors or themes where women specifically carry a big burden, caregiving is one of them. And we want to fund the innovators and the founders that are building companies to address these solutions. And again, just make that loving work that we do easier.
Yeah, because the gaps that are out there is tremendous. And if you have money, it's a lot easier. If you don't, it's really, really a struggle. One thing I want to get to, and I think about how you guys are going about this. Last month, the Aspen Institute launched the Workplace Workplace Innovation Now Challenge, WIN Challenge. You guys are involved in it. A $60 million grant competition. Yeah. What's the goal here? What's the mission?
The goal is to find better solutions for women in the workplace. We are thrilled to partner with the Aspen Institute in this initiative and looking at ways that we can improve the workplace environment for women around AI, around culture, around narrative. So there'll be more coming out in the weeks and months ahead. I encourage social entrepreneurs, philanthropists to take note and support that work alongside us because we need better solutions for women in all facets of our lives.
We've made progress, but we could do better.
We could do more.
It's just, I feel like we have talked about women in money for a long time, women in power in a long time. And like you say, we've made progress. But, if you could change one thing, we've just got about 30 seconds, that would really improve women, money, power, like the whole thing. Yeah. What would it be?
I think it's knowing what you own and asking questions, not being satisfied with the status quo. I think that's probably the biggest thing. One thing that we try to do with our investment process and that our founder, Melinda French Gates, has empowered us to do is to build a diligence process, a sourcing process that's more inclusive, that tries to build and find new patterns of success as investors. And I think that's one thing that I would encourage all of us, whether it's with your 401k, or if you're other institutional investors, to take that tact as well.
I like that. Ask questions. Erin Harkless-Moore, VP and Managing Director of Investments for Pivotal Ventures.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It is Bloomberg Businessweek Daily. We love checking in with mayors. They're the ones on the ground in cities and towns across the country. They're the ones who are making the decisions that affect the lives of people in their communities. And they hear from people in their communities when they're just walking down the street. Mayor Brandon Scott of Baltimore is one of those mayors, and he joins us now in the Bloomberg Interactive Brokers studio. We should note that the city has received money from Bloomberg Philanthropies. It is the philanthropic arm of Bloomberg LP, the parent company of Bloomberg Radio. Mayor, welcome to the program. Reelected in 2024. You've been mayor since 2020. I want to start with the government shutdown because you are pretty close to Washington, D.C. You've got some folks in your community who certainly work there and obviously benefit from people working in the government. The president making comments earlier today that we can expect layoff details in 4 to 5 days. How's the shutdown affecting your constituents right now?
Well, there's a lot of my constituents on unease, right? When you're thinking about over 12,000 Baltimoreans work for the federal government, either directly or on contract. And then when you think about what that's going to mean for them and their families, they're just not at ease right now. And folks want to go to work. They want their government to be working. And of course, then all our residents who depend on programming and things that are just going to be out there that may not be having a direct impact as of yet by the shutdown. But as it continues and goes on, it would be.
What do you consider your biggest problem in running the city? I mean, Baltimore, we report about it a lot. It is the fourth most dangerous, according to U.S. News and World Report, this summer ranking Baltimore the fourth most dangerous city in the country behind Memphis, Oakland, and St. Louis. Based on FBI data, they look at property crime, they look at murders per capita. But what do you as mayor, I'm sure there's a lot that's on your plate. What's top of mind?
Well, listen, violence is always top of mind. It's the reason why I got into office, and we understand that we have a long way to go. But I know you guys know here at Bloomberg Radio the many years that we were number one on that list. And as you and I are talking today, I think it's the mode and the conversation around Baltimore and violence has shifted significantly. We have the fewest amount of homicides through any October 7th on record today. That is a big change. When I said in 2021, laying out a comprehensive violence prevention plan that we were going to reduce homicide by 15% from one year to the next, people literally laughed. Right now, it's down 30% from last year, and last year was a record reduction for us. We're going to continue that.
How did you do it?
We did it throughout our comprehensive plan.
Which is what?
Which is a bunch of things. One, first and foremost, we go and we identify those who are most likely to be the victim or perpetrator of gun violence, and we focus on them. We give them opportunities to change their life, and if not, we remove them via law enforcement. And that's how we're driving down violence. We're focusing on guns and the flow of guns into our city, going after gun traffickers, those who are using guns, arresting them at my direction with the police department, turning them over to our state's attorney and our attorney general. We have historic levels of investment into community violence intervention, where we have people who used to be on the other side of the law going out and preventing conflicts from escalating into violence. All of it. We're going after gun manufacturers.
So people who understand where the problems are, and you're pulling them in to help you get at the problem.
They were the problem.
Yeah.
And now they're part of the solution. And what better way to do that?
How do you get those people to do that?
Well, easy. First and foremost, many people who have made that mistake don't want people coming behind them to make that. And they know that we're growing this network of community violence intervention workers in our city. So the word is out that we want to give people a second chance to be a part of solving a problem that they once were causing.
The city, though, in the crosshairs of the president, he called it a hellhole last month. You and Governor Wes Moore said that law enforcement from the state will patrol some areas. Has that begun?
Yeah, that's begun. And the governor is actually restarting something that was ended by his predecessor. Think about it like this. You would not find any other state police department in any state in this country not operating at all in its only major city. That's Baltimore City was the only jurisdiction in Maryland that Maryland State Police did not operate in. The governor's restarting that. We're grateful for that support and to continue that work.
Are you open to the president sending National Guard troops to the city?
No, we've been very clear about that.
Why not?
We know how to reduce violence in Baltimore. We have reduced violence to its lowest levels ever recorded on record, even lower than the president's first term. The way that we have done it in partnership with our community, with our police department, with our state's attorney, our attorney general, and our federal and law enforcement partners who work beside us each and every day. That's how we should continue that work. If the president wants to help us, he should restore grants and funding that was cut to organizations that help in that. Restore grants, funding cut from those law enforcement agencies. This president has had the biggest reduction in funding for federal law enforcement agencies. They should be restored.
What funding are you not getting as a result?
So for
specifically?
us, we have not been directly impacted as of yet. It's our partner organizations, like, for example, LifeBridge Helps, that runs the Center for Hope. There's a part of our CVI network that has programming around
CVI?
CVI's community violence intervention. They lost a $500,000 grant. The same thing for Living Classrooms. That's big work that is going to be not happening, whether it be a hospital-based response, our community-based responders. We need a victim assistance for young people, getting those young people the services they need. That helps to prevent violence as well.
What will you do, though, if the president sends troops?
Well, listen, we'll be prepared to take whatever action that we can, be it legal or others, alongside our governor and our team, based on when, what, and how the president does something, if he does anything. But what we hope the president does is to continue to support those agents that are already working in our city and let them do their work, and let the law enforcement partnership that has driven us results this far carry us all the way.
But even though crime has improved, even though you shared statistics that show they're the best that they've ever been, like Carol mentioned, your city is still on a list that you don't want to be on. So what would you say to people out there who are saying, well, I would feel more comfortable if there were an increased law enforcement presence, and that could include federal troops? Well,
we had the National Guard in Baltimore in 2015 following the unrest of Freddie Gray. It's one of the most violent years ever. It didn't help, right? Mm-hmm. We have to remember this is not what those folks signed up to do. Allow those folks who signed up to go after gun traffickers, murderers, robbers, carjackers to do their work, and allow the other people to do their work. And listen, there are other lists. There are many of these lists. We were on some lists we weren't on. The list that we want to be on is the list of who has the largest reductions. And you will be hard pressed to find a city in this country that's had a sustainable long-term reduction like Baltimore's had from September of 2023 until now.
What do you see as what's wrong with politics today? What do you think is wrong with what some say is the Democratic Party not very clear in its mission and kind of stepping up?
Well, very simply, I think that
I ask you because I think there's a lot of, forgive me, but there's a lot of folks who think there are politicians who've become career politicians and things haven't changed and we need some change.
Well, I think that what folks have to understand is that for me, and I say this about the Democratic Party all the time, and more recently, They have to let the folks that are closest to the problem be out front and part of the solution, meaning they need to listen to mayors. The mayors are the ones that have to solve the problems. The mayors are the ones that have to meet the people in the grocery store. And we've proven in city after city after city, we know how to drive down crime. And you have to talk to people where they are. We have to get out of being up in the sky with pie in the sky, talk to people in real sense, real things that impact them, and explain to them how these things are going to make their communities better.
How long do you want to be mayor?
I want to be mayor for as long as the residents of Baltimore will have me. This will be my second term. Believe it or not, I've been in elected office since 2011, and I've been in City Hall since 2007.
And you are a young man right now.
Yes, a youngish man. I'm 41. I'll be 42 on my birthday. But this is about making my city better. I got into this service because I saw someone get shot at 7 years old and no one cared. And wanting to drive down that violence, to have vacant housing be at its lowest point in my lifetime in Baltimore is something we're proud of, but we're not celebrating. We have a lot of work to do, and we're going to do it.
The reason I go back there is I do think we talk about this in media, that there isn't a lot of, local publications anymore. A lot of newspapers have shut down. And so we get kind of the high and the...
Yeah, we don't need that. Yeah.
We get that view, but we don't... This is why we love talking to mayors. But often people are mayors and then they move up and they go to governor or then they go to Congress and stuff. So I'm just curious, how long do you want to stay on that local level?
Well, everyone knows
what's the end game?
Everyone knows I don't want to be governor. And everyone in Baltimore knows that I'll be quite okay if being the mayor of Baltimore is the last elected office I ever had. This is my dream job as a child. I will hold it as long as the residents of Baltimore will allow me to do so, and as long as I'm living within term limits.
Before we let you go, because you have a train to catch to get home,
yes,
and we want to be respectful of your time, the attracting and retaining business to the city, we know that's economic development is a way to improve cities. Yeah. What are you doing right now to say Baltimore is open for business?
Yeah, I think that we have to understand we had $4 billion of investment into Baltimore. We have $7 billion investment coming to downtown Baltimore, whether it's T. Rowe Price's new headquarters or Under Armour's new headquarters. Everyone knows throughout downtown Rise plan, we are open for business in the city of Baltimore, reforming our permit process and reforming our zoning code, all the things that we need to do to help grow business in Baltimore, especially in the tech and life sciences industry that is taking off out of Hopkins and out of the University of Maryland, putting a lot of money and a lot of tech businesses out into the ether.
Any signs that we're headed towards a recession?
Well, we'll see. We know that with tariffs and all the other things going, we just have to all be mindful of what's happening and prepare. As we're doing our budgets, I've been talking to my brother and sister mayors to make sure that we're being responsible right now because we do not know yet what is to come.
So appreciate it. Go for your train.
Yes, ma'am. Thank you very much.
He's running for that train. Be well, be safe. Brandon Scott, the Baltimore mayor, joining us here in our Interactive Brokers studio. As Tim mentioned earlier, the city has definitely received money from Bloomberg Philanthropies, which is, of course, owned by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Tick-tock, everybody. We got about 18 minutes to go until we wrap up the trade on this Tuesday. Carol Master, Tim Stanovic, live in our Bloomberg Interactive Brokers studio. Right now we've got 317 names to the downside on the S&P 500, 186 actually gaining ground. But as you heard from Charlie and Bill Maloney, you are seeing stocks kind of stay down for most of the day, just bouncing around our worst levels.
Not every day can be a record day.
Nope, it cannot. Right? That doesn't necessarily make a market.
Doesn't, but it kind of felt like for the last week, that's what we saw.
I'm curious to see what Eric Clarke has to say. He's Chief Investment Officer of AccuVest Global Advisors. They've got $1.2 billion in assets under management. He manages the Alpha Brands Consumption Leaders ETF. Began trading this year. It's up about 2% in the past month. Top holdings include Uber, Netflix, Amazon, Microsoft, TJX, Apple, and more. It sounds like Sounds like my life. All those names.
Last time we saw Eric, he was working hard.
Yeah.
In Huntington Beach, California.
Just as we were working hard
at the Future
in
Proof
Huntington
Conference,
Beach, California.
Enjoying the sun,
Yes.
enjoying the beach.
Yes.
And talking all these companies.
Anybody who's out there, if you're going to do a financial conference, we love you. We love going, but do it on a beach.
Now he's working hard in San Diego, so it's all good.
All right. Hey, listen, good to have you here, Eric. How are you?
I'm great. Well, at least we're not baking in the sun in Huntington, right?
Oh, it's okay. We're going to be thinking when January rolls around, we'll be looking longingly on that early September
Our crew
day
in the control room's like, oh, yeah, too bad you were baking in the sun. Hey, talk to us about this market environment. Remind us, too, like you are known for investing in these well-known brands. How much movement do you do? Remind us when it comes to buying, selling, or kind of parking it and let it just kind of ride for a while.
Yeah, I mean, the goal isn't to turn over the portfolio, but, since the pandemic, the consumer spending trends and how we've dealt with inflation, it's been a unique environment for the consumer trying to navigate all those things. So turnover's been a little bit higher because consumer spending and the trends have been a little bit more unique. Usually, you want to have exposure to really important spending themes like apparel and travel and goods and the service economy. But it's just, it's been a wild ride since the pandemic, and then with the tariffs and changing supply chains. So it's, the portfolio is very kind of what I consider to be very stable, predictable, good subscription revenue in important categories that we either need or we love. Mm-hmm. And so it's a little bit more concentrated than maybe normal. But, if we see the economy accelerating in 2026, we'll probably want to have a little bit more exposure to some areas of spending that we haven't wanted to have exposure to in 2025.
Jamie Dimon said, consumers okay now, but recession could happen in 2026.
And
right?
he said,
we talked about this.
He said that earlier today. Said the bank will be fine, but he would feel for customers, of course.
Yeah.
It's not something he worries about right now. If that were to happen, and we would look at your portfolio and say, okay, there are some names in here that are wants, and there are some names in here that are needs. What are the needs and what are the wants?
TJX is a necessity.
TJX, yeah, Walmart, TJ Maxx, Costco. I mean, I would even argue Netflix and Spotify are pretty needs oriented. Nobody's going to get rid of those in an economic slowdown. If anything, you'll transfer your pay over to the ad tier. So, from a wants, I mean, we still want to go to concerts and live events. And Live Nation stock has pulled back. We've had a little bit of a pullback here, kind of a silent pullback with tech kind of doing all the heavy lifting. There has certainly been some pullbacks since the middle of September. So, there's some good opportunities for people that aren't just looking at the index level. But I mean, Intuit's another good example. I mean, we got to do our taxes. If you're a small business, you got to continue to market and try to generate new clients and engage those clients. So there's a lot of great brands deploying AI that are going to really see the benefit of that over the next couple of years. And everybody just wants semiconductors right now, I understand. But there's a lot to like about this market. And we just don't see a recession. It's always possible. We just don't see it. The labor market, obviously, is the big worry for everybody.
Well, is there anything that's a new ad, or is there anything that you've already gotten rid of? Like, tell us about in terms of movement or adding to positions. It looks like you're pretty consistent on some of these big names, the amount of exposure that you have.
Yeah, we are. We actually have been out of the food names, the quick service. Yeah. Chipotle down here, I think, is pretty intriguing. For a 12-month period, maybe they have a little softness in the current quarter, but we still think the stock has derated pretty immensely. I'm even looking at Lulu. I don't want to get in there just yet, but I think there's some interesting retailers that have been left for dead that are really starting to look intriguing. And so if that's probably where
why is Lulu intriguing to you?
It's down.
Isn't it?
What's that?
Down 55%.
Why is Lulu intriguing to you? Isn't it getting taken to lunch by your neighbor over there in San Diego, Viore?
Viore, yeah. It would not shock me if the CEO of Lulu goes. I think he's made some pretty bad missteps, and it wouldn't shock me if an activist gets involved in there. So that's why I haven't, we haven't bought it yet. We owned it, over a year ago at much higher prices. So the athleisure story is still important. Nike, I think, is a little interesting. I mean, it's a slow but steady recovery. So that one's a little bit interesting on a dip after earnings. But, the service economy is just much more intriguing. It's where the demand is. I think booking is still interesting. Goods right now are just a bit of a struggle because we're just going to start feeling the impact of higher prices from tariffs, heading into holiday shopping too.
What have you gotten out of?
We've gotten out of some of the defensives like Coca-Cola, Progressive Insurance. It's just right now, people just don't want defense in particular. They'll want it again. These are great, stable businesses, but we've just added more to the more cyclical side of the ledger in favor of staples. So we're still a little bit overweight staples, but that's strictly through Walmart and Costco.
You own AppLovin, and that has certainly been in the news in the last 24 hours. Down 14% yesterday. We see a bounce back. Citi actually coming out and saying that they would be buyers on any weakness. They say the regulator has not officially accused AppLovin of wrongdoing. There's more in their call. So we are seeing AppLovin come back a little bit. Are you holding on to your position? Anything you're doing there?
No, absolutely. I want, if I could have bought it yesterday, that would have been ideal. We just didn't get a chance before the close. It's amazing how massive companies can move. Witness Oracle today in a very short period of time. It just, it reminds us that algorithms drive everything, but we still love AppLovin, not a cheap stock, but growing really well, generating a massive amount of free cash flow, super high, revenue to employee, driver of the digital advertising world. They're expanding outside of video gaming with this AI algorithm. So we love the stock, and we just don't.
Eric, sorry, we got to run. Big thank you. Rational Dynamic Brands.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.